Hello, everybody. Another day and more shitty news. I thought July would end and maybe August would bring us something good, but this is not it. So I'll start off at the beginning. I have not bought or sold any IMVT stock today. Of course, I have the right to do so in the future, but as of right now, I have not made any trades. It's about a 10% position now at $8. What happened and what is going on with this thing today? So clearly I was wrong, and there was a third option, not them buying out IMVT, but infusing capital at a premium. And it's very bizarre, all of this, and I'll go into the reasons why in a minute. But it's hard to understand what the game plan is here for Roivant. I think that they are much smarter than I am, and there is more here than meets the eye. So let's try to unpack it all. First of all, why did they announce the conclusion of this process now? Why didn't they wait until after Roivant goes public via MAC, which should be done the next couple months? If they waited till then, they would have kept the stock price of IMVT higher, which I guess would have been good for the SPAC deal. And they also would have had the option to see what Roivant traded at post de-SPAC to then decide if they wanted to use their stock to buy out the minority of IMVT. If you recall in the 13D, they told us they were going to go public before they would ever purchase IMVT. So today we get this announcement that they are buying $200 million of stock at $11.75, which is a premium to where it was trading before, yada, yada, yada. IMVT had $400 million in cash before this, and that was enough for them to last for at least 18 months, probably 2 years. There was no urgent need for cash. They could have structured, if they wanted to show a sign of support, they could have structured this $200 million infusion in two different ways, yet chose not to do either of them. The first way they could have done it was they could have said that they were doing a rights offering at $11.75, and Roivant was going to subscribe for all 200 million. And if other minority shareholders wanted to participate, they could. Of course, the stock's 802 right now, and no one's going to buy stock at 11.75. It would have been more for appearances. But the more sharky way you would have done it is you would have said, I'm not buying anything. We just couldn't have come to an agreement on a price. Stock blows up like it did now to $8 or $7 or whatever. You then either do a rights offering or just a plain secondary, and you do it in the hole, right? They buy $200 million worth of stock at $7 or $6.50. They do a rights offering at $6.50 where they backstop 200 million, and they either get way more stock and closer to owning all of it at a much lower price, or they put up less money because minority shareholders participate at the 6.50 or 7 price range. What do they accomplish at buying 200 million of stock at 11.75? It shows the market that they have confidence in the company, but of course doesn't do anything in the short or medium term for IMVT stock. And if their goal was not to actually own as much IMVT as they could, but to just buoy the stock ahead of the SPAC deal, then they failed at that goal. If you pull up the 13D they filed today, they have interesting language regarding today's transaction. I'm going to read it to you. It says that, let me pull up the actual D. As a result of Roivant and the issuer's entry into the share purchase agreement and consummation of the investment, Roivant and the issuer do not intend to further pursue consideration of the potential buyout at the present time. They could have just said of the potential buyout and left it at that. They put at the present time. They then have a bunch of lawyer language below it that says, other than set forth here, Roivant has no plans or proposals that relate or would result in any of the events set forth in the below items A through J of Schedule 13D. However, Roivant intends to continue to participate in and influence the affairs of the issuer as a controlling shareholder, and Roivant will continue to review its investment in the issuer and, depending on market conditions and other factors, may determine from time to time to engage in any of the events sent forth in items 4A through J. So I think one of two things are going to happen with Roivant. I think you'll see Roivant purchase additional stock in the open market this week. This is one of the options that might happen. So they say they buy like another $25 million worth of stock, which is rounding error to them. It'll show more confidence in the company, and they'll get closer to owning it all. And they're paying, $8 for it versus the $11.75 or $15 they would have had to pay for it if they took it private. If they don't do that, then their goal is to not buoy the stock. And if Roivant is successful in de-SPACing and going public, and that's a big if, by the way, because Roivant has the right to cancel the SPAC deal if more than 180 million of the 400 million in the trust redeems. Their deal is different than most SPAC deals with pipes. They have a pipe, but the pipe does not count towards the money that needs to be left over for the minimum threshold for the deal to go through. So the way I look at it is they might have been talking to the special committee, and the special committee said, you can't buy this at $15. That's too close to the price it was when you put your 13D out. And even from 11, it's not enough of a historical premium for minority takeouts of majorities. Roivant said, fine, you're not going to let us take it out at $15. You guys need cash. We can't raise cash except at a discount, especially after we walk away from buying you. Why don't you sell us some stock at a premium to the current market price? The special committee did not think that that was a disservice to the minority investors, since clearly nobody else is paying $11.75 for stock, and Roivant was willing to. Today, though, it's a different ballgame. Today, the stock's $8, and if Roivant was to go public and then announce they want to buy the minority out at 15 or 14 or even 11.75 6 months from now, it's a huge premium to the unaffected price. And the special committee can approve that. The biggest problem I always had with this idea was that the $10 or $11 it was trading at after it blew up wasn't a truly unaffected price. It was pricing in a premium for Roivant potentially buying it. Here we learned that premium was 24%, 25%. Before it blew up, when it was 15, it was also pricing in a premium with Roivant buying it, but it was a small premium. It went from like 13.50 to 15, and it was like 15 2 days before that. So I didn't have a problem in that scenario paying a premium, but I didn't know how much embedded premium I was paying now going into this negotiation. And I think Roivant and the special committee had a hard time coming up with what the appropriate premium needs to be from what base. You can't argue that the stock should be 8 so we could pay 14 when the stock's trading 10.50 and you filed a 13D when it was 13.50. The problem with the stock is that it's in no man's land. There's no catalyst except for them restarting the trials towards the end of this year. And I don't believe the stock even goes up much on them restarting the trials. So you have, years, 2 years, 3 years, I don't know how long it's going to be before you have any kind of data readout for this drug that has a competitor that is superior. And Roivant knows this, But they didn't have to throw in $200 million more of cash. They could have just walked, or they could have put new money in at a much lower valuation. So I'm puzzled by their actions. I'm puzzled by their original 13D. I don't think that was meant to be market manipulative, but maybe it was. I'm puzzled why they put the 200 million in. They could have put in 50 million at 1175 as a token sign of support, right? $200 million is a lot of money for a company that now today only has an $800 million market cap before the new money came in. It's a big slug of money. And I don't think the whole story's been written, but who's the natural owner of this thing now? XBI, the biotech stocks have been destroyed the last few months, and there's no catalyst for months, for years. And ARBs didn't really like this thing in the first place because of how much hair was on it. There was no kind of price. There was no announced deal. It was a broken drug, a broken company. And, the ARBs that were in it are, I would assume, mostly leaving. So I am doing nothing, which is, not usually the right thing to do in these situations. I should either be buying more or selling it. And I will reassess the position in the coming months. I would like to see if Roivant goes public. If Roivant doesn't go public, what other outcomes can there be? I did a call with Roivant a few months ago, and they suggested that one of the options they had before they signed the SPAC deal was doing a reverse merger into IMVT. But they said that would have been difficult because it's hard to value Roivant, and using IMVT as a reference price, it's just pretty hairy. But if the SPAC deal dies, that would be a way for them to go public through IMVT. Definitely a possibility. It remains to be seen to me how this doesn't eventually end up with Roivant. They only have 36% left to buy now. And if they were going to pay, let's say $14 for that 36%, it would be like a $560 million kind of purchase price that they could use equity for. And for that 560 million equity, they would bring back 600 million in cash into the parent company. They could also just buy for cash, and then they wouldn't even be paying any cash. There'd be no cash outlay. They'd be able to take the cash from Immunovant, use it to buy out the minority, and then of course they'd have to fund Immunovant, so there would be cash needs. But there's many ways for them to roll Immunovant up into Roivant in the coming months after this is over. And I think that they're aware of that. I don't know what has fundamentally changed. They knew what the data was in February. They knew the data was in June. If they did not like this company and they did not like the drug, they wouldn't have thrown $200 million into it for the sake of appearances. They could have put 50 million in. They could have put nothing in. It just doesn't make any sense. So that's where I am with it. It's probably trading around the right price. It should be $8, $9, something like that. I think it'll keep a bid for the reasons I mentioned. The lower it goes, the less they have to pay to acquire the part they don't own. If it went to 6 or 7, they could probably get away with paying the 1175. And the minority committee special committee would be thrilled. And I think shareholders would be thrilled. So I was, simply outplayed. It's a game of checkers, and I was playing chess, I guess. I couldn't figure out how they bridged the price to 15 to 22 when the stock was trading 10. I thought it was a good bargain for them to get it at those prices. And I guess they decided that there's a two-step process here. Mind you, if they do take the company out eventually at 15 or 14 or 13, they save themselves money by putting in the 200 million at 1175. They're going to get the money back, and they pay less than the 13, 14, 15 for it. So, it works to their advantage. The only way putting the 200 million in was a mistake is if they think they were just lighting the money on fire and the company's a zero. and they're too smart and savvy to be doing that. So I still strongly believe that they want to buy out the company, that it makes more sense for it to be in Roivant and not publicly traded, given all the hair that's on this subsidiary. I just don't know how long it's going to take for it to resolve itself. The next step, of course, is to see whether Roivant goes public. And then after Roivant goes public, then we could see where Roivant trades. We could see what happens to Immunovant. They would probably want to do this before they restart the trials by the end of the year. It won't happen in the next few weeks, of course. You can't go do a deal like this and then buy it out a few weeks later, I don't think. Though they could say they didn't expect the stock price to do this. And, you know, the special committee shareholders and the shareholders urged them to take a 13, 14, 15 price. It's possible. Anything's possible. I wouldn't hold my breath. But those are my views. Let me see if I left anything out in my notes. No, that's all I got. Let me see if I have any questions. Show us me. It's MAY-Z, actually. And she's there. Seriously, any questions on this? I'd love to hear other people's opinions. You know, like I said, it was unequivocal failure. I first blew up from 15 to 10, then bought a lot more, and now it's blown up from 10 to 8, and I'm not adding. So likely this is the time when I should be adding, and this is the time it's going to, you know, work is my guess. But, you know, I don't have any buying power. I'm big. I was so big going into it that I'm still big now, and there's just no good reason for me to be bigger in this, given the lack of near-term catalyst and, you know, how far I was wrong on it. So if they filed a 13D showing they bought stock in the open market today, it would make it go up. You know, it would make it go up. And they could, if their goal is not to own it all, to buoy the stock price, and they put 200 million in, and it didn't buoy the stock price, I mean, you bet your ass they put in 25 more million at 8 to then accomplish that goal, or at least try to accomplish that goal. If they don't do that, it makes me think that I'm right, that there's a second part here. And the second part will come in the coming months, in the next 6 months, where they do end up taking out the minority. What is your sense on timing? Well, Roivant has to go public first. Definitely what happened before that. And, you know, that could be in the next 8 weeks. They have to publish a shareholder vote date, and it should be soon. Now, Roivant might not go public. They have to get, or either waive or get half of the trust not to redeem. So you have to watch that, and you have to see what happens. Maybe I'm missing something, but it seems like the right time to cut losses and move on. So, you know, my answer to that, Punta, is 6 million shares are traded today, and 6 million shares were purchased today. So, you know, people that are buying it could be looking at it with a new, fresh set of eyes. They can say that Roivant just paid $11.75 for this, and they're some of the smartest people in the world. If they're willing to pay $11.75 for such a big piece, why wouldn't we be interested in it at $8? You know, it could be as simple as that. At a certain price, I'm always a seller. But in this situation, I'm not concerned here about another leg down. For instance, I don't think the FDA is going to come back to them and say they can't restart the trials. I don't think Roivant would have done this with the 200 million if that was the case. And, you know, what Glenn says is correct. Problem here is now they can wait so long, it can be well dead money for a very long time. That's yes and no, Glenn. If the trials get restarted and they announce the new indications, it could go back into the teens. And if it goes back into the teens, then they've lost their chance at getting it at the price that they want to get it for. So there's a window for them to get it at 12, 13, 14, 15. And it probably is before they restart the trials, if I was them. if you wait for data to be read out, then of course they can't buy it. They can't buy it back. I don't think the special committee would let them buy it back at anything less than, an 80 or 100% premium 18 months from now when they're far along in the trials. They would definitely get sued, and they wouldn't tender. People wouldn't tender. You have to tender for it. They'd have to get a majority of the minority. I thought you were going to stay away from pharma. I thought I was too. I wasn't playing readouts. I was playing it from an M&A perspective, and I got burned once again. So there you go. Now, I don't play phase 3 readouts, and I usually don't play approvals either. How can I follow you on Twitter? Michael Schwartz. I think I know that name. You can't, Michael. Really, you can't actually. But one day maybe. I have a locked account, so I don't let anybody new in. Why own this when one could own PSTH? What's a readout? I think you're kidding. But a readout is when a pharmaceutical company announces results in a clinical trial. So it's a huge catalyst, right? When they announce a phase 3 or a phase 2 or whatever. Sentiment out there. Too many uncertainties versus ARGX and lingering album LDL issues on clinical side, along with Roivant relationship. Hard to believe Roivant will benefit the minority holders. Oh, yeah. Oh, yeah. The stock has got a lot of hair, right? People in the business think that they have an inferior drug to ARGX, which, of course, that's why it went from 60 to 15. And then, of course, people think Roivant's going to fuck them. So, that's your opportunity, I guess, at $8.05. Are there better places for you to invest? Probably, but you have a portfolio, right? And you don't have to have everything in here. You don't have to have anything in here. If you're in a situation where you need tax losses, maybe you take a tax loss on this by the end of the year. I mean, it really just depends on what your personal situation is. I think we'll know a lot more about Roivant between now and the end of the year. So we can make that decision in December. And also we'll get the trials restarted by December. So if you're looking for tax loss, you can always wait till then. But look, none of this is investment advice. I am as blind in this as you are. This sucks. And yeah, not an outcome, I thought. I would have thought no buyout or buyout, not cash infusion at premium. I mean, we're not going to have to worry about a secondary offering for a couple of years. We've got that going for us. Not that I'm going to be holding this for 2 years. Old SLK days. Oh, you're a friend? Hi, Michael. Yeah, you can follow me if you want. My handle's this. Just request to follow me, and I'll accept you. Were you in the training program with me? So MagnaChip is a series of bad news. I'm mostly kidding, but I'm not. I have not done anything there either, though, just a heads up. So 2 things happened in the last week with MagnaChip. The first thing is that a CFI US said that they are doing a formal investigation and they'll be wrapped up by September 12th. That's a 45-day window, which is what they have to do by law. They didn't have to go into the formal process. I think it's vastly likely that they're going to block the deal. There's a chance that they come to an agreement with Wise Road with some sort of structure that lets Wise Road go forward with it. I would handicap that at a low probability. Who knows? What happened that was bad that sent the stock down to 2080, though, was that there was an article that said Samsung is considering moving some of its low margin business, low level business to Taiwanese companies if MagnaChip gets acquired by a Chinese company. Now, Samsung is like the largest customer of MagnaChip, and they're over 50% of their overall company business. So if Samsung starts leaving, then MagnaChip is, in not good shape. But let's unpack this. So first of all, it says if the China deal goes through. If the China deal goes through, we don't care what Samsung does. If the China deal doesn't go through, what does Samsung do? You know, there's a friend of mine told me a few months ago that he was worried that the Koreans would be angry at angry at MagnaChip going forward, and they might do something like this. And he was right, I guess. There's definitely a chance. I thought that was unlikely. I was wrong. So the market's going to be scared that Samsung is going to do retaliatory stuff to them post deal break. Now, mind you, MagnaChip's business is booming, and there's some capacity constraints across the entire semiconductor industry, in all verticals, in all areas. So if Samsung did give some of the business to other suppliers, it wouldn't happen immediately, and it wouldn't be with the legacy stuff. It would be with new product rollouts, new design wins, and MagnaChip would be able to then have capacity, which hopefully they could then sell to other companies. I couldn't even begin to handicap the odds of something like this happening. I would obviously call Samsung walking away from MagnaChip in part, or of course in whole, a black swan event that I wasn't anticipating. Because I have no way of handicapping it, I'm not taking it all that seriously right now. And I'm kind of in a wait and see mode to see what happens with MagnaChip over the next 6 weeks. So what is going to happen over the next 6 weeks? Well, first of all, they have to report earnings. And back in April, they put out a press release at the end of April. It was like April 27th, I think, saying that they were going to report earnings on May 10th, I think, for Q2. And they already had the deal. The deal was announced in March. So that gives you a pattern of what MagnaChip was doing when it came to quarterly earnings going forward while they're in this deal. Well, we're now into August, and there's been no press release telling us when they're going to give us Q3 earnings. They should have done it if there was a pattern last week, and they didn't do it. I don't know whether that's good or bad. I'm obviously very nervous about earnings, but it's the first time that they haven't guided to earnings, which means that sell side has no idea, and they're just kind of flying blind. I'm also worried somehow that maybe Samsung and maybe LG has retaliated in some way, and it's hurt the short-term numbers. So that's really hard to do because there's a huge lead time with all these products. It's not something that you just like decide to buy or don't buy. So that's not likely. I wonder if part of the reason why they haven't put the earnings out is that they are actively looking at a solution to either the Wiserow deal or a new deal. You know, it's of my belief, as I've said many times, that I think the Wiserow deal probably won't go through, but there'll be an alternative deal, some sort of white knight bidder, and that'll please Samsung, it'll please LG, and it'll please shareholders and all the regulators. And I don't think that comes together quickly. I think you have CTFN, which basically insinuated that they do have something like that they're working on. When they said back in June, they became aware of alternate deals should the Chinese deals not be palatable. And ultimately at $20.80, if you get, and you will get, a break fee if Wiserow breaks, you're looking at net cash somewhere in the $8.50 to $9 range. I was wrong. It's not $10 because they won't generate cash flow this year. They're using the cash flow for CapEx. So if we use $8.50 as the net cash position in MagnaChip on a $21 stock, you know, we're at $11.50 to $12.50 in enterprise value. $12.50 enterprise value on a stock that should do $1 in earnings this year, $1.25 in earnings this year, and $1.50 in earnings next year. And even if Samsung was to pull some of this business, you know, my estimates of what it would do to earnings would probably remove earnings probably lower earnings by like 25%. So that $1.50 would be $1.20. And it's just very cheap. So, you know, your setup here is, I believe, virtually, you know, no down, and you could wake up to an alternative deal, you know, at $29.50 or $29.25 or $30 or whatever. And it would be hard for them to do it below 29, but Wise Road might agree to get out of it for no breakup fee. And maybe they do it at a lower price and everybody wins. Wise Road doesn't pay the breakup fee, and shareholders would be pretty happy with $26 or $27 right now, if that's the ultimate price that they got from an alternative bidder. So that's my view with MagnaChip. Frustrated. I'm sick of getting 8Ks. They give me bad news. The next thing we hear should almost certainly be earnings, and they should have to give it to us by by August 15th. And then we'll see. I don't even know what bad earnings could take it to at this point. It would take it to maybe 19, maybe. I just have no idea. I have no reason to think there's bad earnings, by the way. I just am confused about where we are in the process. Brandon Miniman, that's a name I have not heard in a long, long time. Hello, Brandon. What is your base case valuation on MX? Well, I would have had a base case valuation before I was worried about Samsung pulling business. You now have a black swan outcome that is extremely hard to value. And I don't think that black swan outcome will play. And I don't think, even if it comes to play, that you're going to have a stock price that's ultimately worth less than $20 that it's trading at now. I mean, I just kind of did the math for you. If 25% of MagnaChip's earnings go away, you're still going to get to over $1 in earnings next year. And it's trading at $12 ex cash. So I think it's an incredible asymmetric setup here. I could see why nobody wants to own it. Every news flow has been bad. I think that the management team and the board are incredibly aligned in coming up with an alternative solution. The CEO owns a lot of stock, and this is very embarrassing for them on a board level and the management level. And the odds that they just go forward as a standalone company after all this, I would put at under 20%. I don't know what's going to happen or how it will happen, but there's a lot of outcomes. I'll give you one I'm just coming up with a random one, for example. Let's say they get a US private equity firm to buy a third of the company at $25 a share or $29 a share. And they use the cash inflow of that, $600 million or whatever it would be, plus the money on the balance sheet to pay a one-time dividend to shareholders of $15 a share. Maybe the private equity firm buys 25% of the company, from the company at 29, and then does a public tender for another 25% of the company. There's a lot of creative solutions you could do here. It's a cheap stock. The thing you have to be careful about is how do you do it and not piss off Samsung? And anything they do going forward, I think they probably learned their lesson. They'll make sure Samsung is on board with whoever the strategic partner is that they bring in. Any update on BMYRT? It's actually interesting that you asked me that, Richard. I actually spoke to the trustee, and I don't really have anything I can share except that, it's going to take time to work through this process. It's all pretty normal. They're going to go back and forth with this filings, back and forth between Bristol and between the lawyers. And assuming the judge does not throw out the case, which everyone I speak to is very unlikely, then you go to discovery, and discovery can take 2 years. And it's through discovery that you would then get more facts known by either side. And then that's historically towards the end of discovery when maybe you would get the parties talking about possible settlements. But you should expect no news on the BMYRT front anytime soon. Any new ideas you like? I'm in the jobs merger trade. Have you looked at that at all? I think it's really good risk reward. I have not looked at the jobs merger trade, and I don't really have any new trades I like. There is there's one special situation I put on a very small position in, but there's a guy that gave it to me and he's not done doing it, so I don't feel comfortable talking about it. It's really sketchy and really hairy, and it's less than 100 basis points of my portfolio, so it's not that big of a deal. And it's not going to be, the catalyst isn't until October, so there's time to talk about it in the coming months, I guess, if I choose to do so. You know, my portfolio is like huge Groupon, huge MX. It was medium-sized IMVT, and now it's, you know, smaller IMVT, and then the other stuff is just kind of like whatever. You know, I've taken a huge Groupon bet, and we'll see on Thursday whether it pays out or not. And if you want to, you know, hear why the Groupon thesis is, you can go listen to my last YouTube that I did 4 or 5 days ago. Groupon earnings on Thursday, right? Yeah, they'll put earnings out after the market closes, and then the key will be that. But of course, in the deck, they'll give guidance to quarter three. And, you know, I just have a really hard time seeing how, like I said, both quarter two isn't positive and quarter three isn't positive. If you look at the open table data, United Kingdom and Germany are absolutely surging. And those are the two most important markets internationally. And the United States, though, if you look at by city in the United States, many of the blue cities like New York, Los Angeles, whatever, are have not rebounded nearly as much as the national level. So I don't know exactly what that's going to mean for Groupon. But on a whole, the United States is basically trending flat with 2019, and that coupled with a huge surge in hiring they've been doing the last 4 or 5 weeks leads me to believe that it's going to be a very good quarter and very good guidance. And it'll be the first time you have that combination with Groupon in years. And I don't think it will slow. I think quarter four will be just as good as quarter three, and quarter one will be even better. And then quarter two will also be better than a year ago, quarter two, because you have international will be humming, and even the local domestic business wasn't fully operational. I feel like I'm talking about the Death Star in 2021. So your 2022 should also be up big versus 2021. From a gross profit perspective and from an EBITDA perspective. But we'll see. Look, as IMVT shows it, I'm only human. So, you know, it's definitely not guaranteed to work. And I feel really good about it. And we'll see what happens. I'm obviously been very dejected. I was dejected going into today. And then this happens. And, you know, it just makes you question all of your theses. So, but look, I don't need to bat 1,000. If Groupon works and IMVT doesn't, I'll be up a lot more than I lost today with IMVT. I think I've lost today with IMVT. I've lost like 500 basis points. About, yeah, 450, 500 basis points. And I mean, with Groupon, I can make 2,500 basis points on Friday, you know, if it works, or more. If it goes to 60, I don't see that happening, but it could happen. You know, it could happen. So we'll see what happens. I was thinking about doing a live YouTube Thursday afternoon when the earnings come out, but it's I'm too big in it, and I'm going to be too depressed if it blows up. But look, I don't hide or run when things don't go right. So if Groupon blows up on Thursday, and I'll be back here to do a YouTube to tell you where I think either the market got wrong or I got wrong. It's unlikely I'll blame the market in this one, because if it goes down on Friday or Thursday after hours, then the only thing that would make me not question my whole thesis would just be that the reopening is taking longer. But if I saw signs that they've stalled, if May and June were worse than April, or June was worse than May, kind of thing, I'd be concerned. I wouldn't be super concerned if July saw a small pullback given Delta, but then I would want to see international that's really ramping, and I just feel good about it all. I think you're going to see across the board positive results. Goods is going to be the thing that is going to keep it down, but I think that the company and the people that own the stock know that goods is irrelevant. Keep in mind, group and after hours trading last 2 quarters has been really weird. Yeah, I think Glenn, in February it went down after hours and then went up 50% the next 2 days, right? And then the last quarter it went up in after hours and then sold off the next day. He's right. So I'm not going to bank on whatever the after hours move is. I'm really just going to focus on the numbers. And if the numbers are going in the right direction, and if the guidance isn't sandbagged too much, I just don't know how they could sandbag it if the results are going to be as strong as I expect them to be. And then mind you have this data mining service, this company that says the results are going to be weak, that they tracked April and May, and it's barely up from first quarter. Now, we know that's not possible because the company has told us what happened in January, February, March, and April. They told us January and February were, 51% on average. March went up to 65%, and then April went to 71%. And they told us in mid-May that it was getting better week after week in every vertical. So it's not really possible for what that research firm said to come true. But, we'll see. We'll see. All right. Well, that's all I have for you today. I'm going to go into my hole and be depressed like I've been. But hopefully Thursday turns it around. Do you expect them to give full year guidance? I do, Punta. I love your name. Because they have every time. So I don't expect them. It's going to be interesting. They only have 2 quarters left. And as you get closer to the end of the year, of course, the full year guidance is really just giving you guidance on those 2 quarters. In the past, they did not give guidance for a specific quarter. They just gave the full year. So yeah, my expectations are for them to raise EBITDA guidance. I don't know what they'll do with revenue guidance. I assume they'll raise that as well. A lot of it has to do with how the goods transition goes. Revenue really isn't that important because of the change in revenue recognition. The EBITDA is a tricky subject because as they ramp marketing, they cut into EBITDA. But they knew that when they gave the last EBITDA guidance, and they raised EBITDA guidance last quarter. So I've talked a lot about on here that it's hard for me to see really under any outcome that they do, let's say, less than 15 or 20 million of EBITDA this quarter. They did 30 million last quarter, and the street has them negative. The street has them losing money this quarter. So let's say they do 20 million this quarter, even with the ramp up in marketing. That puts them at 50 million for the first half of this year. It's very hard for me to see how they do less than 30 to 40 million in quarter 3, even with the ramp up of marketing. So let's say they do 35 million. That gets them to 85 million going into quarter 4. And I think their guidance is 110 to 120 for the year. Let me pull it up. It was 100 to 110, I think, when they originally put it out. And then they raised it with the huge number they put up in quarter 1. Hold on a second. Yeah, they're at 110 to 120. So if they do 85 into Q4, that means Q4 would be 25 to 35 million. And Q4, they should do like 75 plus million. So it's my bet that the true range of EBITDA this year is more like 150 to 170, not 110 to 120. And that's with a real increase in marketing. And by the way, increases of marketing create EBITDA and they create top line growth. So they get a return on them. The question is what kind of marketing you're spending. Are you spending in lower funnel, mid funnel, or top funnel? Top funnel is immediate returns. Like think of it as like a sponsored ad, and then you click through the link and then you buy something. A medium funnel would be, I guess, some sort of short-term advertising campaign. And then the bottom of the funnel is rebranding Groupon, a Super Bowl commercial. You're not really going to get necessarily any transactions from that, but it pays off longer term. So they're mostly doing the more short-term oriented returns right now, though they said over time they're going to increase to the lower end of the funnel. I mean, if you really want to take a step back for a second, Groupon said at 80% of 2019 gross profit, they would do 250 million of EBITDA. I believe they will exit 2019 at a higher rate. They will exit 2021 at a higher rate than 80% of 2019 business. So going into 2022, at the beginning of the year, they will be at greater than 80%. And when they guided to that 250, that included the marketing spend hiking. So, you do the math of what 2022 guidance could be, right? 22 guidance could be 230 to 270. And it's a huge number. We're talking about a stock right now that has $1 billion market cap. And they could do 250 million of EBITDA next year and growing. So all it takes is the street to see that the customer count's going up, not down, that it's sustainable, that the new business model is making some traction, and all of a sudden you go from a terminally declining business to something that's here to stay and is kind of a core business for a select group of people. And when that function changes, you have a whole different game with Groupon and a whole new shareholder base that'd be interested in buying it. So we'll see, but that's kind of my look at that's what I see happening. And if anything goes wrong along the way, I will. There's a baby crying. I'll re-examine it. I got to edit my position. None of this is investment advice, but I've never been bigger in it. It's as big as it's ever been for me right now, going into Thursday. So we'll see what happens. The market doesn't always get it right either immediately. It could take weeks for Groupon to revalue after earnings. It's so volatile. Look what it did. It went from like 64 to 50 in between earnings, and then now it went from 50 to 36 in between earnings. So these things move, and moves a lot in the 3 months outside of earnings. I can't tell you what's going to do, but I feel incredibly bullish about the next 6 to 12 months. All right, everybody, take care. Good luck. Sorry about IMVT. Hopefully we still make some money there. I don't know if we will, but let's hope the next data point on one of my stocks is better than this one was. Bye.